Let me ask you something. When you evaluate an AI company, when you're deciding whether it's worth your attention, your capital, your conviction, what are you actually measuring? Most people are measuring revenue, earnings per share, PE ratio, quarter-over-quarter growth, the metrics Wall Street has been using since before the internet even existed. And I'm going to argue that for the AI revolution specifically, those metrics are the wrong scorecard entirely. Not because they're irrelevant, but because they measure what a company has done. And the AI revolution is fundamentally a story about what companies are structurally positioned to become. There's a difference between a company that is growing because of AI and a company that is compounding because of AI. Most investors can't tell them apart right now. That gap is where the real opportunity lies. Today, I'm introducing a framework I built to close that gap, and I call it the AI gravity stack. Here's the problem with near-term earnings as your primary lens on AI companies. Earnings measure the past. They tell you what already happened. For a mature, stable industry that's mostly fine, that past is a reasonable predictor of the near future. But AI is not a mature, stable industry. It's a structurally reorganization of how value gets created across every sector simultaneously. In that environment, the companies that look most impressive on a trailing earnings basis are not necessarily the companies that are building the most durable positions. Think about it this way. In the early days of the internet, 1995, 1996, the companies with the best near-term earnings were not Amazon, Google, or Microsoft. They were companies you've never heard of, established businesses that were generating real revenue from existing models, while the structural winners were still burning cash building infrastructure. The investors who got the internet right weren't the ones reading quarterly reports. They were the ones asking a different question. Which companies are building assets right now that will be structurally harder to displace every single quarter that passes? That's the question the AI gravity stack is designed to answer. So let me walk you through it. The foundation of the framework is what I call an AI attribute. AI attribute is a single discrete asset, capability, or data source that independently generates AI relevant value. For example, a fleet of robots, a satellite constellation, a search engine with decades of query data, a database containing the majority of the world's enterprise records. Each attribute stands on its own, but its real power comes from what it feeds into. Here's what I've observed across every major technology company. The ones building durable positions aren't collecting attributes randomly. They're building what I call an AI gravity stack. The total collection of AI attributes a company owns, where each attribute strengthens each other one. This is where it gets interesting. A company with 14 interlocking attributes is not 14 times stronger than a company with one. It is exponentially stronger because every attribute it adds increases the value of every attribute it already has. That compounding dynamic is what creates gravitational pull. The company starts attracting talent, customers, data, and capital not because it's marketing well, because its structural position makes it the natural center of gravity of everything orbiting the AI revolution. More attributes, deeper the interlock, stronger the gravity. Now here's the distinction that I think is the most important and most underappreciated in how people think about AI companies right now. Not all gravity stacks are built the same way, and understanding the difference changes how you evaluate every company in the space. The first type of AI company I call a gravity generator. A gravity generator is a company whose attributes are deeply self-reinforcing from within. Each attribute feeds and improves the others in a closed loop. Gravity is endogenous. It generates itself. Amazon is the clearest example. Their logistics generates data. The data trains the AI models. Their AI models improve their chip design. Their chips make their robots better. The loop is continuous and self-sustaining. Every attribute they add tightens the loop. Google works the same way. Their search engine generates query data. The data trains their AI. Their AI improves their search. Their search generates more data. Their data advantages their quantum computing research. Everything feeds everything else from inside the system. These companies generate their own gravity. They don't need external forces to make their attributes more valuable. The system compounds on its own. The second type of company I call a gravity conductor. A gravity conductor is a company that sits at the intersection of multiple gravity fields and channels them without necessarily generating its own internal compounding loop. Its attributes are powerful but more parallel than interlocked, and it benefits regardless of which competitor wins. The company doesn't need to pick a winner because its structural position captures value from every direction the industry moves. Two more concepts to complete the framework. The first is what I call a company's archetype. The archetype is the dimension of reality a company is ultimately trying to own through AI. Amazon archetype is the physical world operating system. Logistics, robotics, chips, satellites. They want to own how physical things move. Google's archetype is the information and perception operating system. They want to own how humans understand reality. Understanding a company's archetype tells you what they're really building toward and whether their current AI investments are coherent with that long-term vision. The second concept is the gravity score, qualitative count of a company's distinct AI attributes used to compare structural positioning across companies. A higher score means more surface area to compound from, and this is critical. The interconnectedness of those attributes matters as much as the raw count. A score of 14 deeply interlocked attributes outweighs 14 parallel ones every time. In the videos that follow, I'm going to run specific companies through the framework and give them each a gravity score. The results are not what Wall Street would predict, and one company in particular, the one I'll cover next, has a structural position that almost no one is talking about correctly. The companies with the most interlocking attributes are not just bigger than their competitors, they are structurally harder to displace with every single quarter that passes. That's not a growth story, that's a compounding story. Compounding stories play out over years, not quarters. The investors who understand the difference between a gravity generator and a gravity conductor, between a company growing because of AI and a company compounding because of AI, are going to see things in this market that most people will only understand in hindsight. This framework is the lens I'll be using to evaluate every major AI company on this channel going forward. Each one gets its own video. Each one gets a gravity score. And the picture that emerges when you lay them all side by side is one of the most interesting investment landscapes I ever analyzed. My personal opinion on this AI revolution is that we're very much still in the early stages. That's why I think this AI gravity stack framework is very important. You can't really rely on the usual fundamental analysis stats that we use for companies that are very well mature. Even the hyperscalers are very early in their AI structural positioning. And this framework will help us see if a company is truly compounding by AI. This is the Alchemical Investor, where we turn information into gold. Subscribe, because the next video applies everything you just learned to the one company no one is evaluating correctly.